Okay, this week, I want to start really with the markets. We had the debt ceiling debacle get resolved this week. I am uh, not for what's going on for the long run. Um, we've got to cut spending. It's going to happen one of two ways. It's going to happen by virtue of the economy is going to collapse to such a point that we can't afford anything, which is the route that we're heading, and it's not that far off. And or you know we keep kicking the can down the road, and it's going to get bigger and bigger and worse and worse. So you know this debt ceiling thing. Some people look at it as a victory. Maybe put some wind behind the backs of the markets this week, but we're in bad shape. And I look at um, David Hunter's, which I talk often about. You can follow him on Twitter. His what his expectation is that we're going to see this uh, melt up. We're just now starting to hit all time highs in different well what Apple's within a couple dollars, $3 of going to an all time high. And we had Nvidia. It's starting to get that frothy feel that we had back in 2000, and so David Hunter's been predicting this melt up and then a huge crash of 80%. Peter Schiff has been talking about a 90% drop at some point for seems like decades, but really he thought it would happen during the great financial crisis back in after 2008, and it didn't happen then. So this is although I'm happy about the markets being up today and for the week, big today, and it's starting to look like we might be seeing this melt up that David Hunter's been talking about. So I'll kind of mention what some of the targets are for these. There are a slew of them, but I'm just going to start with some of the big markets and kind of go from there. And then my final comments after I go through everything else is I want to talk about the market breadth and what I'm looking for as I sit back and look at the markets. I look at what David Hunter's saying, I look at Peter Schiff's saying, and so let's just kind of start with the markets. And I showed you last week. This is a daily chart that I'm showing you right now of the Dow Jones Industrial Average, and you know we've got this potential head and shoulder pattern that's working here, and it seems to be fitting fairly well. I'm expecting we'll probably get a little bit of a pull back. Maybe it might be over several days after today's big 700-point blowout that we had, um, and so I'm looking for the completion of this head and shoulder pattern, and you know we start to break up, and it's supposed to go the depth here, but I don't really want to talk about that per se because David Hunter's forecast. I want you to consider where we are right now. We're at 33,760, and David Hunter's forecast is for 48,000. Now, we've got to first get to this all-time high, which is roughly, almost 37,000, 36,900 was the all-time high. Now, should pretty easily make its way there. Now, it's not going to go up in one big straight line, as you can tell. It's back and forth, up and down. But you know, there is enough wind at the back of the markets at this point that I think that, I mean, it's becoming more and more apparent that David Hunter's forecast, at least the first part of it here, let's wait till we get to all-time highs and we'll start talking about the melt-up from there. But it could happen very quickly, so that we go from 36.9 to 48,000. I mean, think about that, 48,000. You know, that's another 12,000 in the market, and 15, roughly 14,000 from where we sit right now. I mean, that would be an incredible feat. We look at the SPY. We got kind of the same thing going. You know, we broke out of this downtrend. We're making our way. I'm still, like I said last week, I'm waiting for it to break above this kind of uptrend line and get back on the right side of that, which it won't happen tomorrow, but, and within a month or two, I think we could start to see that. And then the forecast for the SPY would be roughly around 6,000. So another, 170 some odd points from where we sit today. If it goes out. Now, don't do what I do, but I months ago, when this came out, I went out and bought 80-cent futures or options, that expire next June. So I know David's forecasts are slow. So I gave myself some room, but for 80 cents, what the hell? It was $80 a contract, or for $80 a contract. So anyway, that kind of gives you a sense. We look at the Qs. It's all-time high. We sit at 354. Is a little over 400. So within 50 points of the all-time high. And then you have, so that basically represents, the NASDAQ. And, that would be, and, where we would start to begin to see the melt up from there. Now, I won't start talking about, because I don't want to get too depressed, but think about if we do get an 80-90% crash afterwards. He's calling it the end of a cycle, he being David Hunter. I don't think Peter Schiff expects that. Most of the people that you're going to hear talking on TV are not talking about this at this point. They were talking to melt up. Now everybody's saying, oh, yeah, something's happened, and now the market's going up. But I have to give him credit, David Hunter credit, for looking at things much differently. He is very guarded against how he goes about his thing, and I know some of it's experience, but I'm intrigued and have been for over a year now, but probably 2 years actually. So let's just kind of briefly take a look at some of the other things that are going on. The expectation here from David Hunter is that this the 10-year yield will make its way back up, fill this gap here. It almost did last week, but and these are daily plots. But I think it's going to go back up, as the expectation is that maybe the Fed continues, although I still see that they're looking at a potential pause. They may not. It may go ahead and start to roll over from where it is now and not fill the gap. But we'll just have to wait. Actually, there's a couple now. We got one here, and then we have the one that I noted earlier. So we've got one up here at 377, 378. Then we've got the dollar. If that goes up, we can expect the dollar to probably wind up in this range up here around 105 if the gap is filled on the 10-year. And then the crude oil portion, it's slowly making its way down. I think it's supposed to bottom in the 60s. I think oil, his expectation that, when we get to the bust portion, will be somewhere like in the 30s, uh, down to $30 or so. And we kind of experienced that during the whole COVID craziness. So the VIX continues to get hammered down, as with the markets going up that much. That's the lowest it's been since October of 2021. So we're starting to hit levels that are extremely low. We start getting down into these areas when we had the run up before COVID, and the collapse here and in March, and then made its way back down, and now we're making our way back through, which should be, again, these are all things that you expect to see in a market that is very bullish. So those are those. And one other thing is the put call ratio is down low again. Remember when it was up here? I mean, not that long ago. That was at the end of last year. And then we were even up in here at 1.3. So now we're right at 0.7, which usually indicates anything below 0.7 is a bullish indication too. So we have all these things that are basically saying, we got wind at our back, and we're doing some things that would indicate that this is going to continue, and that David Hunter may be very correct. So let's take a look next at the economic calendar, and we'll take a look at this past week. We had home prices, and expectedly were down year over year, month over month, up a little bit. It's the time of the year, house buying, hunting, consumer confidence came in a little better than expected, and most of these things, some of it's good news, some bad news, on how the Fed views it. Dow manufacturing index, manufacturing just continues to get hammered. We had the mortgage rates go up to 6.91%, and my expectation would be if we go fill that gap on the 10-year, then you're going to see this up or over 7%. Again, just to look forward, David Hunter's talking about this going to zero, or the mortgage rates being, getting 1% mortgages, but there will be about 10 people who will qualify. So we'll see what happens with regards to mortgage rates down the road after the bust. But Chicago PMI, that's awful. Expect a 47 down. Like I said, these are bad. These are contracting numbers. But then we had employment up, from the JOLTS, but we'll look at Friday here in just a second. Thursday, manufacturing PMI, again, missed a little bit, but still under 50, so still contracting. Then we had the unemployment rate actually ticked up, but the number of jobs increased. The payrolls increased by 339,000. And then obviously today, we had the PMI came out lighter. So we're getting, it's very mixed. After this employment report, I was expecting yesterday, I thought maybe we'd see things go down quite a bit, and it did not. And then today, obviously, the follow-up was, and I don't think it's just debt ceiling. I think it's just, who knows? As David Hunter says, it's the end of a cycle. But when this cycle ends, it's not going to end pretty. So let's take a look at next week. We have very light. We got ISM services PMI expected to be 52.3. We'll see how that winds up. And then, like I said, the mortgage rate probably is going up. Initial jobless claims on Thursday. Like I said, there's just not a lot there for next week. But the following week, there will be quite a bit of activity of FOMC when Powell come out and make a speech too. Nobody's expecting a quarter point increase. If he does that, then you might see some negative things happen in the market, at least at this point. And it's been a mixed bag. And so we'll see what's happening. I just believe he keeps going to quarter point, more things begin to break, especially in the banking sector. All right, as far as investor sentiment, bullish or bearishness went down, bullishness went up a little bit. A few more people in the neutral category. Again, starting to trend in towards where I begin to get fearful when this thing gets all the way over. Which now we take a look at the fear and greed index. You can see it's at 65 after a huge day. I mean, it was just unbelievable to see the 700-point increase in the Dow Jones, and it's been kind of lagging behind. And that's actually where I want to kind of end this episode. Is I want to take a look at this is the percentage of stocks that are above the 200-day moving average. Now, as you would expect, and maybe I could be better for me to put it on weekly, or well, that didn't help. I want to go back in time. Yeah, well, that'll give you an idea. This is when we started the bear market at the end of last year, all the way through 2022. Maybe I do need to put that back on daily because I can't really see the so this is February of 20. This is this year, but you can see back when the bear market was starting back in here, and rolling its way down. The breadth of the market started to get less. Fewer companies were over the 200-day moving average. And now we sit at 40.43. And back in February, earlier in February, a few months ago, we had a lot of breadth. Things were really moving up. I think things, and then kind of the bottom fell out again. And we haven't recovered that breadth. And so I'm going to keep an eye on this because we need to see greater breadth in the market. We need more participants. And even today, after a good day, we went from 38 to 40, but we need to be up here, 60s, 70s, 80s, for it to be a really cool, bull market like we've had in the past. So, and this could look like an inverse head and shoulders here. So there's a lot of things I'm kind of watching with regards to the breadth in the market. But one of the things I am definitely watching is the IWM. And, this is a lot of smaller companies. And like I said, they haven't really participated in these big moves. The Dow Jones ran up, then it just kind of stalled out, and then built this kind of head and shoulder pattern. And SPY's been, kind of winding its way up. The Q's kind of exploded its way up. But the IWM, representative of a lot of different companies, just now broke out of this box that we've been in since March. So this here is hopefully a good sign that we're breaking out of the, just up and down within a range. And this gives you hope today. Now this could be a false breakout. We got to have some more confirmation, but it filled this gap here. We got there's a lot of work to do on the IWM, and I think the IWM, roughly, David Hunter was looking at roughly 300 from where we sit, right now. And so it's got a long ways to go. The all-time high sits at 243, 240, roughly 245. So that's another, 33%. So I'm looking now, as opposed to playing some of the companies that have already run up, the Apples that are almost at all-time highs, the Nvidia that's already at all-time highs, with the AI play. I think those will be good stocks for the long term, but they're also pretty frothy right now. I mean, Nvidia has a an unbelievable ratio of earnings to share ratio, and we'll see how that winds up playing out. That's you know I want to see this thing. I do want to see it go up, but I hate to think about what David Hunter is talking about with regards to the collapse, as well as Peter Schiff. They're all saying it's coming. They have a lot of experience. Peter on the economic side, David Hunter on the market side. And so that has me, as that gets closer, which expectation that this would potentially happen either the end of this year or the first quarter of next year, when we get the collapse, then, or the bust, as David would say, collapse, as I think Peter Schiff would say, will have some worrying things. This is one of the reasons why I really want people to educate themselves on what tools they have available to them, because most of the time, people put their money in their stock and it goes, and nobody's ever talking about, you can't, in your 401k or IRA, you can't short the market. And the only way to do that is to learn about it and kind of control the money that you have, because if it's going to go down 80 or 90%, you can participate in that if you understand the different options tools that are available to you, where you can hedge it all the way down. Now, this last time I didn't do that very well. It's a mindset change to be able to do that. But that's one of the reasons why, during the bear market, got an education. If it's always bullish, that'd be awesome, because then, all you have to do is, like you said, just stick it into a stock and let it go. But if it's going to go down 80 to 90%, when do you get out? And I'll keep talking about it. I don't know. David Hunter doesn't have a timeline in particular on it. I think he would have thought that all of this would have happened by now from previous comments, but things change in the market, and and as they change, so does the forecast and when things will transpire. But he's kept the same mold, David Hunter has, as Peter Schiff has, with regards to the economics of things. So anyway, that's what I wanted to cover this week. And remember, there is always a better way.